Hello student, I Dr. Shafali Jain, Assistant Professor at Thankar Mahavir University. Student, today we discuss about block 5th, the meaning of cost. Cost. Cost is the monetary value of goods and services purchased by producers and consumers. For example, a consumer typically equates cost with the price of a good, such as a loaf of bread, a pair of shoes, or a car, or a service, such as a haircut or a night in a hotel. For a manufacturers or service provider, cost input cost is the amount of money spent to produce something and is subtracted from the revenue earned from selling the good or service to determine the profit. So it means the concept of cost in economics refers to the total expenditures a firm incurs when utilizing economic resources to produce goods and services. Resources in the economy are scarce, and the allocation of them is an efficient manner is an essential step toward maximizing the firm profit. So, cost economic cost is a combination of the losses of any goods that have a value attached to them by uh, any one individual economic. So it means cost refers to the amount to expenditure incurred or acquiring something. If in the simple words यदि कहा जाए कॉस्ट मीनिंग ऑफ द कॉस्ट इन हिंदी कीमत कीमत क्या है एक किसी वस्तु को गेन करने के लिए जो हमें खर्च व्यय किया जाता है उसे कॉस्ट कहते हैं ये कोई गुड भी हो सकता है या कोई सर्विस भी हो सकती है उसको हमें अगर उससे हमें सेटिस्फेक्शन चाहिए किसी गुड से या किसी सर्विस से अगर हमें उसकी यूटिलिटी को यूज करना है और हमें सेटिस्फेक्शन लेना है तो वी हैव टू एक्सपेंडिचर सो we have to expenditure then we will get that things so a cost is an expenditures incurred by a firm to produce goods and services for sale in the market. So एक जो firm है उसको भी किसी goods और services को अगर produce करना है if he want to produce any goods or services he have to pay the he have to uh, he have to incur the expenditure. In the other words, cost is the outflow of money from the business to gain inflow of money after sale of the commodity. First of all, any firms, if he want to operate a business, he have to expenditure in the inputs and after that after sale the commodity he also gain the profits. So a producer has to incur various costs in order to goods and services. So we can say that uh, the cost incurred in connection with raw materials, labor, um, labor, other heads constitute the overall cost of the production. So, so in simple words, we can say cost a key concept in economics in the monetary expenses incurred by any organizations for various purposes such as acquiring resources, raw materials, producing goods and services, advertising, and hiring workers. And we can also cost define as a monetary expenses that are incurred by organization for a specified things or activity. Student, hope you understood well what is the meaning of the we discuss about the types of cost. These costs are of various types. Types of costs. The followings are the various types of costs: direct cost or explicit cost, indirect cost or implicit cost, fixed cost, variable cost, accounting cost, economic cost, total cost, average cost, marginal cost, and opportunity cost. In this video, we discuss about the direct cost or explicit cost and indirect cost or implicit cost, and other cost we discuss in the further videos. Now, what is the direct cost or explicit cost? Explicit costs are those costs which are met by cash payments for employing various factors of production. The producer actually pays money to produce his goods and services. It means explicit costs are the costs that involve an immediate outlay of cash from an organization. It means out of pockets cost for an organization. Means these types of cost includes all charges paid to complete the production, such as the cost of land, labor, electricity, stationery, postage, etc. So basically, the explicit cost involve all the cost paid to outsiders, while the business is carried on. So uh, it means explicit cost or direct or explicit cost is the material, labor, expenses, overheads, selling and distributions, administrative cost related to the production of a commodity. It is accurate in nature, and explicit cost can be easily trackable, and explicit cost can be defined as follows. An explicit cost is a direct expense that is paid in money to others or creditors during the productions of goods. It means the explicit cost, the recording of explicit cost is critical because it adds in the calculation of profits and serves other purposes such as decision making, cost control, reporting, and so on. So, explicit cost is a type of cost which includes all type charges paid to the complete the production. The use of the explicit cost, it shows the expenditure incurred of production of the commodity, which is considered for pricing strategies. Um, and it also helps in calculating profits. It helps in decision making. In the simple words, we can say explicit costs are normal business expenses that are tangible and easy to track. There appears in the journal ledger. Explicit costs are the only cost used to calculate a profit, as they affect the company's bottom line, and explicit uh, cost are easy to identify the link to the company's business activities to which the expenses are attributed. They are recorded in the company's journal ledger and flow through to expenses list on the income statement, and the net income of a business reflect the residual income that remain after all explicit costs have been paid. So explicit costs are the only accounting costs that are necessary to calculate a profit, as they have a clear impact on the company's bottom line. Explicit cost um, Matrix is especially helpful for the company's long-term strategy planning, and with it, the explicit cost is uh, explicit cost are tangible expenses that appears in a company's journal ledger and are used to determine profitability. Examples include wages, lease payments, and raw materials. So, explicit costs are the out of pocket expenses incurred by a business in the production of goods or services. These costs are easily identified and can be directly attributed to a specific activity or business function. And explicit cost, businesses can make informed decision about pricing, production, and resource allocation. Overall, business should carefully monitor their explicit cost to ensure that they are managing their resources effectively and making uh, financial decision. In such simple words, we can say explicit costs are the all the expenses incurred as part of the normal operating cost of a business. The explicit cost of a company includes all monetary payments that the company makes, all outgoing cash flow in the ordinary course of operating its business. So, as we include the followings as salaries, wages, bonus, commissions, and any other forms of compensations, and to companies employees, and the cost to benefits provided to employees such as insurance, and material cost refers to any material that a company must purchase to produce the product or any service that it sells, and it is also include marketing and advertising cost, rent, payment on company facilities, utilities such as electricity and internet service, and the cost of purchasing and maintaining equipments that a company requires in order to operate, such as manufacturing machines or vehicles. And you can also include taxes, insurance, legal fees, etc. And explicit cost as being monetary payment made, while depreciation doesn't involve a payment of money. It does have an identifiable and quantifiable value and represent an ordinary operating expenses of a business. Explicit costs play a fundamental role in calculating a company's profit as they directly impact its bottom line. They are essential for strategic long-term planning within the business. The explicit cost serves several vital purposes as profit computation. Companies calculate two types of profit: accounting and economic. Accounting profit incorporates both implicit and explicit expenses, whereas economic profit consider only explicit expenses, making the explicit cost essential for this computations. And it is also explicit cost is also important for the cost management. Finance departments focus on explicit expenses since they are directly quantifiable and accountable, allowing for more effective cost control. And with it, explicit cost is the helpful to corporate strategic planning. Explicit cost has a main role to determining a company's profitability as a what profit a company gain in the future, and what goal setting for it is also helpful for the goal setting and decision making. So explicit costs are significant for a company's financial well-being. This evaluation directly reflect the explicit cost incurred by the companies related to its income, and it is also helpful to cost control and management. So explicit cost analysis in budgeting and financial planning. Explicit costs are helpful when preparing budget. Organization must account for explicit expenses to create accurate financial accurate financial projections and allocate resources efficiently. So it is also helpful. Explicit cost also helpful evaluating business performance and efficiency. So explicit costs are essential in calculating a company's profit, as their directly impact is financial performance. In the explicit cost, we take several explicit costs as cost of raw materials and supplies. The suppliers categories include expenses for paper and other materials necessary for office operations. Raw material costs are expenses made on raw materials utilized in producing the company's product and service that constitute an explicit cost. With it, employees' wages and salaries. Salaries, wages, and made to professionals for specific tasks are explicit cost incurred by the companies. For example, payment made to consultants and others. Next, rent and lease payment. This is the recurring expense paid by the organization to maintain operational facilities is considered as explicit cost. With it, the utility expenses, cost related to the utilities such as electricity that the company utilize for its business operations are explicit expenses. With it, marketing and advertising cost, the expenses incurred by the company to market and promote its products are categorized as explicit cost in the journal ledger. With an example, we can also um, better understood what is the explicit cost. Suppose Ankit, a businessman. Ankit owns a business, and he paid the money different things. Goods, suppose on amount to be paid for goods 5,000. Office rent he paid 1,000. Employee salaries he paid suppose 2,000. Suppliers he paid 500. Insurance 800. Electricity bills 200. Hence the explicit cost here will be on goods he paid 5,000 plus office rent he paid 1,000. Employee salary he paid 2,000. Suppliers 500 plus 800 insurance and plus electricity. So the summations of all these costs, all the paid amount to be paid, all these things is called the explicit cost. Hence the entire explicit cost amount which is the summations of all the payment. So I think you well understood what is the explicit cost. Now we discuss about the implicit cost. Implicit cost, indirect cost, or implicit cost. Implicit cost are those costs which the firm lets to go or sacrifices in order to hire an alternative factors of production. These costs are opportunity cost of the factors of production. Implicit cost is also cost as imputed cost. Here, cash outflow doesn't happen. And implicit cost is defined as under. And implicit cost is the factor of production sacrificed by the producer for an alternative factor production. The opportunity foregone, the opportunity foregone is the implicit cost. In the simple words, we can say implicit cost are the cost of the opportunity that a company can't use because it is not visible to the outside world. Implicit cost are the cost of the resources already owned by the firm that could have been put to some other use. For example, an owner of an organization could use his her labor to earn income at a job. Implicit cost not entail any cash outflow from the business. Implicit costs are not recorded in books of account, not they are reported. The purpose of determining the implicit cost is to aid in decision making regarding the replacement of any assets. And implicit costs are those expenses incurred on self-supplied factors for which in no payment in cash or on credit is made. So suppose Ankit is a businessman and he owns a business that he has newly started. Basically, it is a startup. Hence, to help with the expenses, Ankit has decided not to take his salaries and hence his salaries. If Ankit has taken his salary, this amount has been added to the explicit cost because it is his own business, so he is not taking salary, and his salary is called the implicit cost. So, in the simple words, we can say an implicit cost is any cost that has already occurred, why, but it not necessarily shown or recorded as a separate expenses. It represents an opportunity cost that arises when a company uses internal resources. We are also focusing again internal resources toward a project without any explicit compensation for the utilization of the resources. This means when a company allocates its resources, it always forego the ability to the earn money of and the use of the resources elsewhere. So there is no exchange of cash. Put simply, an explicit cost comes from the use of an asset rather than renting or buying it. So, in the simple, if we say, we can say an explicit cost is the cost that exists without the exchange of cash and it's not recorded for accounting purposes. And implicit cost represent the loss of income but do not represent a loss of profit. And implicit costs are in the contrast to the explicit cost, which represent money exchanged or the use of tangible resources by a company. Example of implicit cost include a small business owner who may forego a salary in early stage to operation to increase revenue. So implicit costs are also referred to as imputed, implied, or notional costs. Notional cost. These costs aren't easy to quantify. That's because businesses do not necessarily record implicit cost for accounting purpose as money doesn't change hand. These costs represent a loss of potential income but not the profits. Implicit cost, a type of opportunity cost. which is the benefit that a company misses out on by choosing one option or alternative versus another. The implicit cost could be the amount of the money a company misses out of for choosing to use its internal resources and versus getting paid for allowing a third party to use those resources. For example, a company could earn income from renting out its building versus the revenue and from using the building for manufacturing and selling its products. A company may choose to include implicit cost as the cost of doing business since they represent possible source of income. Economics include both implicit cost and the regular cost of doing business when the calculating total economic profit. In other words, economic profit is the revenue a company generates minus the cost of doing business and any opportunity cost. So, implicit costs are technically not incurred and cannot be measured accurately for accounting purposes. There are no cash exchanges in the uh, in really in implicit cost, but they are an important consideration because they help managers make effective decision for the company and also is very useful in the for the company. Here we also put an example of implicit cost. Examples of implicit cost include the loss of interest income on funds and the depreciation of machinery for a capital project. They may also be intangible costs that are not easily accounted for, including when an owner allocates time towards the maintenance of a company rather than using those hours elsewhere. In most cases, implicit costs are not recorded for accounting purposes. Suppose when a company hires a new employee, there are implicit costs to train that employee. If a manager allocates 8 hours of an exiting employee's day to teach this new team members, the implicit cost would be the exiting employee's hourly wage multiplied by 8. This is because the hours could have been allocated towards the employee's current role. So we can say that so an implicit cost is an opportunity cost or resource that could be utilized elsewhere. An example would be an individual who start a business and while working is not making any money. The labor they put into starting their business could be utilized in another job where they would earn a salary. Their labor in the business is an implicit cost. I think you have understood well what is explicit cost and what is implicit cost. Now we also see the difference. We also make understood the difference between explicit and implicit cost. What is the difference between explicit and implicit cost? First of all, meaning. Explicit costs are those costs that are met by cash payment, and implicit costs are those costs that are not met by cash payment. Next, nature. It is direct cost, and implicit cost. It is an indirect cost, and there explicit cost there is a proper record keeping of these costs as there is money outflow in this, and implicit cost there is no record for these costs as there is no money outflow inbound. I have also explained it in the various examples types. It is an expenditure incurred for production. It is an opportunities sacrifice to employ other factors of production. And next, money outflow. There is outflow of money and there is no outflow of money. Other name, output pocket cost, implied cost of notional cost, etc. So we say that in the explicit cost involve a cash outflow due to the use of the prediction factors, and implicit cost of which there is no monetary outlay, and uh, expenditure incurred, there is expenditure incurred, there is no expenditure incurred. Examples: salaries and wages, rent paid, purchase of raw material, etc. are the example of the explicit cost. Salaries to proprietors, interest on owned capitals, etc. Occurrence actual and real in nature, and implicit cost notional in nature. So explicit cost is the out of pocket cost, as I have also explained you, and implicit cost imputed cost, and explicit cost in this cost payment is made, while implicit cost payment is not made. Occurrence, if we can, in the reference of the occurrence, explicit cost applied while implicit cost implied, and if the sense of the expenditure, explicit cost expenditure recorded or reported, while implicit cost expenditure not recorded or not reported, and in the sense explicit cost is the estimations of cost is objective, while implicit cost, sorry, explicit cost, in the sense of the estimations of the cost it is objective, while implicit cost, in the sense of estimation of cost it is subjective, and in the explicit cost can accounting profit be calculated with the cost, while in the implicit cost cannot accounting profit to be calculated and cannot calculate it with the cost. And if you take the example, explicit cost implies salaries, raw material, rent paid, etc., while implicit cost honors salary. In the simple sense, we can say explicit cost refers to the actual payment made to the outsiders for hiring services of the factors of production. These expenditure are incurred and payment is made in cash or credit basis, while implicit cost refers to the cost of self-supplied factors of the production, while explicit cost uh, honor and outsider wages paid to the employees, rent paid for hired hired employees, interest on loan, etc. While implicit cost, these expenditure are incurred on self-supplied factors. Hence, no payment in cash or on credit basis is made. Only honor interest on own capital, rent of the land, etc. So, hope student you well understood what is the explicit cost, what is the implicit cost, what is the uses of explicit cost, and what is the uses of implicit cost, and what is the difference between explicit and implicit cost. Student, hope you have understood well. So now, thank you very much.